Welcome back, everyone. Today, I'm going to share with you how to use the Fibonacci tool. It's one of my favorite tools. It's my go-to tool along with some other ones. But today, specifically, take a look at Fibonacci and then I will apply it on the NVDA chart. Okay, this is all part of chart reading, which I believe is the one skill if you want to know your buy prices and what prices to sell out of your stock so you can take profit, it's a necessary skill. Let's jump right in. Pulled up NVIDIA chart, very clean chart. There's nothing on it. And so what is going on with NVIDIA? It's a great stock, but as you know, in the news, it's been going down, or at least not going up, because a lot of the other companies are getting away from depending on NVIDIA chips to train their AI models. For example, Google and Meta are designing their own AI chips and getting away from depending on NVIDIA. All right, so today we're going to talk about the Fibonacci tool. What is the Fibonacci tool? What does that look like? If I go over and select the Fibonacci retracement tool, I can click a point, swing low to the swing high. So a low point to a high point, and this is what it looks like. I draw it and I stop right there. And then you can see that there are lines, and there's a 0.2236 line, 0.382, zero point 0.5, and so on. That's the fib retracement tool. How do we use it? First of all, look at the trend. Where is the trend? There are two ways that you can do this. You can draw a trend line, or if you want to quickly eyeball something to find the trend, you can put the 50 SMA and the 200 SMA. These are simple moving averages, 50 and 200. And so I'm going to add those right now. We want to change this to the 50. And for the style, keep it blue. That's good. This one, let's change it to the 200. And for the style, just to make it clearly distinct, let's make it red. And here we go. We got the 50 and 200. And to quickly look at the trend, just ask one question. Is the 50 the shorter moving average over the longer moving average? And yes, it is. All right. So that is a good sign that it's in an uptrend right now. And generally, I avoid buying stocks, long stocks, if the 50 has recently crossed the 200 and there is a lot of space. The more space there is between the 50 and 200, that just means the trend is stronger. And especially if the 50 and the 200 are slanted upwards or curled upwards, that means the trend is stronger. So we got the 5,200. And then on top of that, we can draw a trend line. So let's draw a trend line. And we draw a trend line as a support if it's an uptrend. So this is a trend line that I drew since last year, 2024. That would be 2 years back. And so it's been on a continuous uptrend. It came down and then it broke back through, and it's been bouncing over this upward trend line. Okay, upward trend lines are support. And recently it came down, it broke below the trend line, below the 50, and now the trend line and the 50 has become resistance. If we zoom in, you can see it broke through and then it retested and it broke down. So the current short-term trend, and you can see this, is we have a high, a lower high, a low, and a lower low. And so we have currently a downward trend line. But the longer term trend looks like it's going up because we have the 50 over to 200. But in the shorter term, it looks like we have NVDA on a downward trend. All right. Now, today's video is about Fibonacci retracement, and I'm just going to keep it as simple as possible, which is a fib retracement is used to see where you either want to buy the stock at lower prices, safer prices, when the trend is up, or where you want to sell your stocks and take profit when the trend is down. So first, let's start with the uptrend. The uptrend, okay? So when the stock is going up, 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 up like this, you're thinking to yourself, I don't want to pay today's market price. I want to find a lower buy price that's safer. Fib retracement is a good tool to use. And the way you do it is you start from the bottom and go to the high points. Draw from here up to here. All right. And so from this swing low to this swing high, this was back in April 2025 when the entire market was down. And you can see that it's pulled back down. So we're trying to find cheaper prices when the stocks are going up. And NVIDIA's been going up, and we want to see how far we can buy at a cheaper discount. First pullback level, 182. So you can see that it's been up there. It went past that. And the next pullback level, cheaper price would be at 164. And then perhaps somewhere at the 0.5 level. And that's at 150. 150 is a great number. That's a even well-rounded number, psychological level that people are quick to just say, oh, this is a good level to buy, zero point 0.5. And you could see that there's a gap. So it aligns with this gap zone here. It's a local support. So if we kind of move it down, like right around there, about 148-ish, if the prices do a deeper pullback, that's a good area. And here's another good. If the markets all come down, does it even deeper pullback than 148, 134, so on. And of course, you have the 200, which is a good support level. So you have a buy zone from 164 to 157. So this would be a less deeper, more shallow pullback. So this area would also be an accumulation area. Maybe you want to buy in using smaller position size. And as it pulls back deeper and deeper and deeper, you can increase your purchase amounts, right? So for example, you can do like 10 here. You could buy 10 NVIDIA here. You could do 20 here. You could do 50 here. So you're not just blindly dollar cost averaging. You're being a little bit more strategic, right? You're buying more NVIDIA stocks at deeper discounts. All right, so prices going up. When you're focused on buying a good stock at cheaper prices, you do a fib retracement from the bottom, start at the bottom to the top, and then you will find cheaper prices on the way down to buy. Now let's clear this. That's on an uptrend. Now, what if you hold NVIDIA stocks and you want to sell out? You want to take profit. So that's where you look at the downtrend. And right now, we have a downtrend line here, and I'm going to draw a fib retracement starting at the top and then ending at the bottom. Swing high to the swing low. So the price is currently here. What are some take profit levels? What are the price targets that you can sell out of your stock? All right. And generally, zero point 0.5 is a good level to look at. And I'm going to make this red. Red for resistance. All right. So before we were looking at support levels, now we're looking at resistance because as the price climbs, it gets harder to climb higher and higher, and these become ceiling resistance levels. And 0.5 is the midpoint. So this a take profit level would be at 191 at the halfway mark. But take a look at this. We have the 50 aligning with the 0.382. So this would be a very strong resistance, right? It would be a tough nut to crack through the price action getting through 185 because there's alignment of the 50 resistance prices under the SMA. So that becomes resistance coupled with this resistance level. So you have two resistance levels on top of each other, which makes it a tougher resistance. And the nearest take profit would be at 180 because we're at 174. So 180 and then 185, 190, 196, and so on. And that's it. That is Fibonacci retracement. Using that on your chart readings, powerful tool. On an uptrend, see where you can find cheaper prices. The Fib retracement will show you support levels beneath it. And on a downtrend, the Fib retracement can be used to mark higher price levels where you can take profit. So quick lesson today on chart reading using one of my favorite tools. If you found this useful, interesting, look forward to future videos. I'll share more tips and insights. Thank you for watching, and I will see you in the next upcoming video.